All right, welcome to Talk Tickers. Today we're digging into Quanex Building Products, ticker NEX. Now, here's the deal. After their latest earnings call, the stock just took off, soaring nearly 10%. But, and this is the interesting part, management basically told everyone to expect a flat, kind of tough year. So what's going on here? We're going to break down exactly what the market was seeing that made it so bullish.
So yeah, let's just jump right in. You're looking at a stock that ripped up almost 10% after the earnings call. But here's the puzzle, right? On that very same call, the leadership team was basically signaling, hey, get ready for a pretty flat, challenging year. It's a huge disconnect. So the big question is, what on earth did investors see that made them ignore that cautious guidance?
Okay, so the first piece of the puzzle really starts with their Q4 results. And let me tell you, Quanex didn't just meet expectations on profit. They absolutely crushed them.
All right, let's get into the nitty-gritty here. If you look at the top line, revenue, it was pretty much exactly what Wall Street expected. So, no real surprise there. But, and this is where it gets exciting, look at the adjusted earnings per share. They posted 83 cents. The consensus, just 50 cents. That's not a beat, that's a knockout.
And just to put that into perspective for you, that's a 33-cent beat. We're talking a 66% surprise to the upside. I mean, think about it. When a company that's staring down some serious economic headwinds can pull off that kind of profitability, yeah, you better believe investors are going to sit up and take notice. So, the natural question is, how in the world did they pull this off? Well, this wasn't about a sudden surge in demand, not at all. This was a masterclass in operational execution, pure and simple. They were laser-focused on squeezing more profit and, more importantly, more cash out of every single dollar of sales.
I mean, just look at these numbers year over year. Their gross margin jumped by over 400 basis points. That's a full 4 percentage points. And then the free cash flow. This is the real stunner. They went from burning about $8 million last year to generating a positive $66 million this year. That is a massive swing. And that right there, that's the self-help story the market absolutely fell in love with.
And that really brings us to management's playbook here. Look, they know the housing market is tough right now. You've got high interest rates, affordability issues, the whole thing. So instead of just hoping things get better, Quanex shifted their entire focus to what they could actually control inside their own four walls.
The CEO, George Wilson, he laid it out perfectly. He basically said, we're not just going to sit around and wait for the market to save us. Nope. This was all about a disciplined strategy, focusing on operational rigor and efficiency. And let me tell you, if you're an investor worried about a potential downturn, that is music to your ears. It's exactly the kind of message you want to hear from leadership.
And this wasn't just talk either. They put their money where their mouth was. They took that awesome cash flow and paid down a whopping $75 million in debt this year. When you see a company strengthening its balance sheet like that, de-risking the business, that just screams confidence and discipline from the top. Okay, but it wasn't all smooth sailing. There was this one big, dark cloud hanging over the company. They were having some serious operational issues at their plant down in Monterey, Mexico. It had absolutely hammered the stock last quarter, so heading into this call, it was the massive question mark on everyone's mind. But instead of trying to sweep it under the rug, management tackled it head on. And they came with a super clear, totally credible plan. First, they owned it. They said, yep, this cost us about $8 million in operating profit, in EBITDA, this quarter. Then they laid out the action. We're moving to 24/7 operations to burn through that backlog. They even gave a forecast, telling investors to expect a much smaller $3 million drag next quarter. And finally, the goal. We'll have this fully stabilized in the first half of the year. You see? By doing that, they took what was a huge risk and turned it into a clear, believable path forward. For investors, that's golden.
All right, so let's tie this all together. Why in the world did the market get so excited about what was, on the surface, a pretty cautious outlook?
And here's the bottom line. The market heard all the cautious talk about the economy, but it saw incredible internal execution. Investors basically decided to prioritize the stuff they could see and touch, the hard numbers, the powerful cash flow, the debt getting paid down, and that super clear plan to fix the Monterey plant. All of that tangible good news simply outweighed the uncertainty about future demand.
And if you need any more proof, this chart says it all. Check this out. Over the past month, Quanex stock, NXT, is up over 25%. At the same time, a big ETF that tracks the whole housing sector is actually down almost 5%. This wasn't the market betting on a big housing comeback. No way. This was the market making a very specific bet on this company and its ability to get the job done.
And believe me, this was a high-conviction move. We're not talking about a small number of buyers. Trading volume on the day of the call exploded to nearly 5 times its normal average. This wasn't just the stock slowly drifting up. This was the market in a single day saying, "We were wrong about this company," and decisively repricing the stock higher.
Okay, so looking ahead, what should we be keeping our eyes on for the next earnings call? Well, here's our take.
So here at Talk Tickers, we're kicking off our coverage with a market perform rating. Now, what does that mean? It basically means we expect the stock to perform right in line with its peers in the building product space. We're balancing two things here. On one hand, their proven, top-notch execution. On the other, those very real economic headwinds that even management is telling us to watch out for.
We're setting our price target at $21. And really, what you should be watching for is pretty straightforward. Think of it like a checklist. First, is that Monterey fix happening on schedule? That's catalyst number 1. Second, do they feel confident enough to bring back their formal financial guidance for the full year? And third, are they still making good progress on those synergy goals they've talked about? Now, the risks, they're pretty much the flip side of that coin. The economy staying weak, and of course, any sign that the Monterey fix is getting delayed.
So look, the market has clearly rewarded Quanex for its amazing execution. The big question heading into the next quarter is simple. Can that powerful operational momentum keep winning the tug-of-war against the broader market uncertainty? We'll be watching. And just as a reminder, this is for informational purposes only. It is not financial advice.